Right, the recording is rolling. Welcome back, everybody, to another stream. Today is Friday, July 21st. Today we're actually just going to be doing a review of the previous week. Unfortunately, I wasn't able to trade most of these days due to the issues that we were experiencing in Traddoo with Trade Locker specifically. Thankfully, we're able to move over to MT5 now. So once we get that going, we will get it started. But let's talk about this previous week. It's going to be a very, very short one today. It's going to be very simple, very sweet, very easy, as it was just pure continuation, right? Nothing too much to look for. So, daily chart, obviously, we were bullish if we were looking at this area back here when we had broken this high right here with this placement. We came back into this area, this previous candle before candle, started to make our move to the upside here. So, now let's talk about Tuesday and Wednesday when it started to show its hand. So, I'm going to go from the daily now to the 4 hour. This right over here real quick. But as we can see, right, once we started on Monday, which was right here, we had made a move to take out that previous week's high. So Monday is going to be your move to take out the previous week's high or low. Tuesday is going to be a either reaccumulation or redistribution. So it's going to be a continuation. We'll look for a price to accumulate or distribute, creating new demand or new supply, right? In this case, we created new demand after we had taken this high right here, pushed to the upside, right? We saw that close over this previous high right here, break a structure, candle before candle, right? Came right back into that. You can see that reaccumulation on Tuesday coming into near CPI, I believe that we had. I don't believe it was CPI, but we had some red news. I will go ahead and check that for you. But going now from the 4 hour to the hourly, after we had that push to the upside right here, we push to the upside, we have our candle before candle, as well as that imbalance that was left just before that, right? So that points to that bullish market that is still continuing to the upside. Many people get lost in these continuation plays and they say, hey, where's the next short going to be? And they're constantly trying to short the next high, short the next high, short the next high. And they end up being that liquidity, right, for price to continue to the upside, which is what we see right here. So even though we're still creating these higher highs and higher lows, people are trying to predict saying it's going to go down, it's going to short once it goes over this, so I have to catch this trade, right? When instead all we have to do is just wait for price to show us that, meaning it's still creating that higher high, came down, created that higher low within discount, mitigating that candle before candle. We got another break of structure to the upside right here. You can see we took out this high, candle before candle right here, came right back into it again. I'll show you guys lower time frames as well, for an entry on this. But the point is, and the moral of the story is that if it's continuing to create those higher highs and those higher lows, then why are we looking for anything else? Meaning, why are we still looking for downside if it's not even there yet? It's still creating higher highs, higher lows. It's still bullish, right? It's still showing imbalances on breaks of structures to the upside. It's showing small moves to the downside, not creating a lot of imbalance, right? Taking a while, and then we see the large explosive pushes to the upside, showing us that bullish continuation. So after we had that push into the previous week's high on Monday, Tuesday was that reaccumulation for the continuation to the upside that we saw here. Now, coming into Wednesday, it's going to be either the same thing, meaning it's going to be a continuation, so a reaccumulation in this case, or it could be a possible reversal. The only way to call that would to be for it to show up first. So if we were still looking for bullishness and we saw this high again get taken out, this is our next institutional candle, meaning we came up, we created that high, higher low, and then look, we created another high right here. So this low had caused now this new high. We're still creating higher highs and higher lows. Come back down, we liquidate previous traders who are trying to get into longs right here. We reaccumulate, we break structure again to the upside, more displacement, right? We can see the areas of fair value or imbalance, whatever you want to call that, that are left behind. And then following that, push to the downside that we can see right here, people started to again say, hey, it's got a short, right? They're looking to the left saying, where's the supply zone or where is this area of resistance so I can short it to the downside? When instead, we're just playing what's right here at this point in time. Meaning we saw that break of structure to the upside, price came back down into that area of fair value. We get a mitigation, we get that liquidation, and then we get price to move up. It creates a higher low, and then here's our higher high. So now we have that creation of new demand, right? That tells us If price comes back into this candle before candle now, our area of demand, we can look to take it to the upside, right? And Wednesday and then Thursday is going to be a continuation again. So it'll either be your reaccumulation or your redistribution. In this case, it was a reaccumulation as we were bullish on higher time frames. So we just created new demand after liquidating late longs. We took out those late longs, created a high, a higher low, and then we broke structure to the upside, again leaving imbalance. Price came right back into that candle before candle coming into Thursday, and then around 9:30, which is I'll show you guys the 15-minute chart here. Get out of this. But coming into those areas of where we can look for that higher time frame liquidity to start to push to the upside, meaning around 9:30. That's when your equities open. That's when the most volume is going to be in the market. So that's when your largest moves are going to then occur for your US assets, right? I'm trading US30. So as we can see here, we saw where price broke structure to the upside. So if I had another institutional candle, which is this push down before we broke structure to the upside right here, we can draw it out just like this. And we can again wait for that mitigation, the liquidation, and then the creation, meaning we got a mitigation, price came down, it pushed away. This got people to FOMO into longs. We got the liquidation when it pushed to the downside. This got people to FOMO into shorts, right? And then once that short liquidity was built, and we could even look to the left here with these equal highs that are being created, these relatively equal highs, that causes price to now say, hey, we're ready to move to the upside. Everything is bullish at this point in time. The 15-minute had made its move to the downside. We coming around 9:30. We can look at the 5-minute chart here. Wants to pull it up for me. There it is. But every single day, it was just the same exact thing, a reaccumulation. We took out previous demand and then we created new demand. Took out previous demand and created new demand. And where you can get caught up is when you try to predict, right? You try to tell yourself, I have no idea why it's doing this actually. Let's go back to the 15. But you try to tell yourself, hey, I need to catch this trade, or I need to make some money today, or I need to do this, or I need to do that, when it's not even there yet, right? Instead, like we were talking about earlier, it's still creating higher highs and higher lows. So after we had saw that push to the upside here on Thursday, 4:30, more imbalance was created. And then coming into Friday here, this is where we can get a little choppy, right? Fridays and Mondays are going to be those days that we kind of see a manipulation move, either to the upside or to the downside, to get traders to say, hey, is it going to go short or hey, is it going to go long, and have them predict for the weekend coming up. Meaning, last Monday we took out our previous week's high. So everyone who had predicted shorts right here and held those shorts throughout the weekend were then taken out. After they were taken out, price started to move to the downside again. So what do you think they did when they came back in on Monday, Tuesday, and said, I'm still short, right? It's moving to the downside, so I'm going to short it again. Same exact thing. But we get that push to the upside, another high is created. We're still creating higher lows and higher highs. Strong low causes this new high. Mitigation, liquidation, creation. Again, another strong low that has caused this new high. So this is our now most previous range that we can look for price to settle in, kind of hang around here in premium or discount. And this is where we can start to get our sentiment coming into the next week. Now, I had talked about this earlier. I'm not sure if many of you were in here when I was talking about this, but this is going to be a shorter stream just because I'm not going to project anything, right? Like I was talking about last week. We'll see what happens on Monday. We'll see what happens on Tuesday. And then Wednesday through Friday is going to be those days that I look to trade. Coming at the charts around 9:15. I'm looking to trade around 9:30, 10 o'clock. Those are going to be personally what I deem the most confirmed entries. This is US30. So this is Dow Jones. But yes, those are going to be the times that you'll see price start to push away, right, with force, to the upside or to the downside. The point is, there's the most liquidity in the market at those points in times. And as the quote unquote composite operator, right, or the manipulator of the market, whatever you want to call them, they are greedy. So they want to be in the market when there's the most money so they can take the most money, right? It's the same kind of human nature feeling, but just on a higher, larger scale. So we can wait for them to show that, and then we can say, okay, now I'm going to start to look to get in after I get that mitigation. Do I get a liquidation? Do I get a break of structure? Yes, I do. I can confirm that now, lower high, and take this into this weak high here. And we can continue to just play weak high, weak high, weak high, and not try to look to the left all the way over here, right? Whatever chart you're on as far as the time frame goes, and say, hey, this it has to go here. Instead, we're literally just playing what's here already, what's already being shown. This is how those day trades can occur, and this is how those day trades can start to compound as well. Because if I'm only looking for just this weak high after we come into this move right here, I mean, we're still looking at a move that's, say we caught it right here, 160 points, right, on a Thursday. You could take one trade really during 1 week and be fine, as far as what is presented every single day in the market. So if we can tell ourselves what is our higher time frame trend, what is our draw on liquidity, and then from there use those lower time frames to then confirm that, then you'll be able to start to find that confirmation bias as well as that confidence for yourself, because now you're within the flow of the chart, right? You're within the flow of the market, within order flow. So all you would have to do to learn in this case, if you did not take this here, or maybe you took this here, got stopped out, this is going to start to help you because now you understand direction. So now if you know direction, you know where it's going to go. That's when all the little refinements and everything from there can start to play. So that's what's going to help you guys out as far as confidence goes. And then every single day when you're getting into these, if you're trading these day trades, right? Seriously, it's just rinse and repeat. Same exact thing over and over, looking at it at the same exact time from Wednesday through Friday, looking for the same exact move based on my higher time frame chart, and then looking to confirm that, right? So the easiest thing we can do here, and let's say this reversed right here, I'll talk about this in a second, but it's just play what's there. So let's say we came into the market on Thursday. We were looking to trade around 9:30. We saw the push up at 9:30, and then price decided to liquidate and break to the downside with displacement. Yes, we took a loss, but what does that tell us now, right? What is the market telling us now? That instead of continuing to the upside and holding that most previous low that caused a new internal high, we have broke that to the downside with displacement. So instead, I now have a area of supply that I can look for price to come back into, confirm a lower high, and look for a continuation to the downside. So this is what I deem my disapproval theory, as well as my approval theory. We can seriously just wait for price to come into that POI and approve us or deny us. If it breaks through with displacement, we've been denied, right? If it does not, and instead on lower time frames creates that higher low, then we've been approved and we have that ability to take it to the upside. And you're able to learn the markets this way and react to the markets this way instead of trying to predict zones, predict where it's going to go next. Like I was saying before, you're just playing what's there. Friday, Thursday and Friday, unfortunately, I wasn't able to take any trades. I was talking about this earlier too with Trade Locker. That was unfortunate, but now that we have MT5, we will be good to go for next week. So as far as sentiment goes, like I was saying earlier, it'd be very, very, very difficult to call short here and say it's going to go to the downside. We saw this little move that I draw out right here. We'll talk about that in a second. But the reasoning for that is because we're still bullish on the daily time frame, the 4-hour time frame, the weekly time frame, right? So if I'm going onto the lower time frames trying to predict that short or that top, I'm only going to end up hurting myself in the long run, as the moral of the story is bullish, right? So on the lower time frames, we just wait for that confirmation. We could probably see price, take out this low right here, maybe create some quote unquote displacement, get people to go short, and then we reaccumulate coming into next week here, taking out the previous week's high and continuing to the upside. I mean, to the left on the daily chart, I'll show you this. I literally see nothing. I think we're going to all-time highs personally on 30. Everyone's going to be looking to the left here, waiting for highs to be taken out and waiting to short this when, like we were talking about before, it's still very, very, very bullish on higher time frames on the right side of the chart. This is all old money. This is the new money. This is what is happening right now. And from that, we are able to take advantage of what is happening right now at that day, at that time. But that is pretty much all I had for you guys. I'm going to leave it open for about 2 minutes here. If you guys have any questions or anything like that, feel free to type them in chat. And if not, then we will be good to go. I did record this. This will be posted to YouTube upon completion. So I appreciate you guys popping out. Appreciate you guys spending your Friday nights, right? The fact that you're here and the fact that you sat there and watched this entire thing already puts you above 90% of your peers, 95% of your peers who don't have that patience, right, to sit these trades out and sit their system out. It's the same exact thing, right? So if you have that discipline to stay here and stay here, I applaud you. So thank you, thank you. I hope you guys have a great rest of your weekend. Like I said, feel free to just add me anywhere. You can add me in Trado. You can DM me if you wanted. You just have to add me and ask me any questions. But this was recorded, will be posted to YouTube. Thank you guys, and I will catch you all later. Peace out.